Hello everyone. Today in this video we would be sharing the best way to avoid transfer pricing disputes. And guess what? It works every single time. Transfer pricing is an effective tool to allocate profits across the value chain globally so that every tax jurisdiction in the value chain is remunerated with an equitable and fair distribution of taxes. But note, the beneficiaries of this should only be the corporations having belief in fair practices, but get caught in the tax litigations due to reasons other than transfer mispricing. A transfer pricing litigation is a conflict where the tax authorities of a country are of that opinion that the activities undertaken by the taxpayer are not remunerated as per the value created by the taxpayer in the country of business. Taxpayers are the partners in nation building, and an essential element of building that relationship or partnership is trust. A taxpayer's honesty should be reflected in the deeds that are undertaken in substance and also in the documentation maintained in the legal form. Once you have the trust factor with you, your chances of a transfer pricing adjustment go down drastically and therefore avoid litigation every single time. So, let us understand the factors that could help you build the trust factor with the tax authorities. First, transfer pricing setting mechanism. Once the prices are set right and well planned for, it becomes easy to gain the trust of the tax authority by explaining the build-up of prices and the thought process through which the entire price setting exercise was undertaken. Second, robust documentation. Transfer pricing is all about documentation. Unless it is on a piece of paper, it cannot be considered as evidence in the eyes of law. For example, a cost plus method of setting the price is irrelevant if the costs are not defined and the rationale behind adopting such costs are not highlighted. However, the documentation could be strengthened if such a methodology is approved and finalized by the board of directors, which marks like an approval seal on behalf of the company. Third, utmost compliant. Maintaining and documenting transfer pricing policies is of no use if there's delay or failure in compliance, as it leads to ending up in list of defaulters. A well complied taxpayer is a complete taxpayer. Fourth, simple submissions. When the tax authorities call for certain additional documents, details, and explanations, keep the submissions simple, factual, and to the point. Avoid including case laws and judicial precedents as it signals the authorities that the taxpayer is set for a fight and gives the authorities a leverage as dispute on similar fact pattern has taken place. Fifth, the larger picture. Tax authorities should be viewed as partners. As a partner, provide certain figures and factual positions on how the taxpayer has contributed to the economy, and business results are in line with the competitors, not comparable. Use soft skills to your advantage and build a case which cannot be rejected. All of these points would lead to a high level of trust and ensures that dispute is avoided with tax authorities. Having said that, it is always advisable to approach a transfer pricing advisor who has a track record of actually having implemented these points and executed them successfully. For more details, you can reach out to us at our email ID info@transprice.in. See you in the next video. Until then, zooming out.